Welcome, Fintech Talkers, to another edition of the Fintech Talk Show. This is Patty, and our guests today are two future startup unicorn CEOs innovating in payments, banking as a service, and other things in fintech. Please welcome welcome back, Shamir Karkal from SilaMoney and Brion Bonkowski from Tern. Our call today will focus on how they're virtualizing banking and finance, innovating in payments, building new rails, removing friction in cross-border payments, and more. Are you curious about how banking as a service is becoming a utility? What is fintech as a service? And how would you build banking for developers? Then listen on as my guests have all the answers and more. Welcome, Shamir and Brion, to the Fintech Talk Show.
Thank you for having me, Patty.
Yeah, thanks, Patty. This is great.
This is great. Look forward to it. Before we dive into the fintech and banking as a service and payments, can you talk a little bit about your journeys for our audience? What made you get into APIs, BaaS, or banking as a service, and payments? Maybe start with Shamir first. You go first.
Sure. So, Patty, I kind of fell into this in some ways. I was a consultant back in 2009, and I was doing a bunch of consulting for financial institutions in North America and in Europe. And a friend from business school sent me an email saying, let's start a retail bank. That's how I ended up founding Simple, which was probably the first neobank anywhere. I moved back to the US and started it up in Josh's basement in Brooklyn in late 2009. You'll see how crazy I am. And it took us 3 years to go from initial idea to actually launching Simple. And that's where I kind of learned about how hard it is to build and ship anything innovative in the world of finance. And that was a very formative experience for me. Simple then was acquired by BBVA a few years later. And I heard about this idea at BBVA of building platforms. And I was like, yes, please. The world needs API platforms in banking. If this had existed, Josh and I wouldn't have spent 3 years just launching Simple. And then what more could we have done, right? And so I got very excited about the idea, left Simple, moved to BBVA and spent a couple of years building API platforms for them, built and launched one in Europe and one in the US, and built and launched them and even signed up customers. But I was never able to make it grow the way I really wanted to at BBVA. So I left BBVA in 2017 and then started up Sila in 2018. And we've been live now for 2.5 years. We have 50 plus customers live in production, and business is great actually. But for me, in some ways, it feels like this is kind of what I've been doing for the last 12 years, one way or the other.
Now, how fascinating your first entrepreneurial journey kind of triggering or leading you to the second one. And I've heard so much of that. I want to kind of ask you a follow-up on that, but let me go to Brion first for his opening remarks. Brion.
Great. Thanks, Patty. My background is actually more in enterprise software and systems. I built out a company in New York that catered to New York's, small and medium enterprise communities in ERP and CRM software. So that really gave me kind of a foothold in understanding what drives CFOs to make decisions, right? What drives these businesses to prosper and grow, and how the money flowed in and out of these various systems. And I actually got into payments in 2010 after building out kind of this, ERP and CRM expertise. And I set out to apply what I knew about enterprise software to the payments ecosystem. I started out in the acquiring space, and I found the acquiring space pretty quickly to be, I hate to say it, but it felt like it was full of car salesmen, and I was competing against people that were, just like a race to the bottom, not a whole lot of innovation. This is, when Braintree and Stripe were kind of like coming into fruition as well. And I felt that there was a lot more innovation actually happening on the issuing side of the house. So we tried to find an interesting use case for issuing. And we found one in cross-border e-commerce. So these are people outside of the US who want to buy goods on US e-commerce websites, and either their cards didn't work, or they didn't have credit, or they didn't have, a wherewithal to actually purchase these goods. So we ended up finding a company called US Unlocked that was doing exactly what we wanted. And we asked them if we could white label their platform and kind of build it out and essentially monetize their platform. And they said no. And luckily, a few months later, luckily for us, a few months later, their bank decided to get out of the prepaid issuing space. And they came back to us and said, hey, are you still interested in doing business? And we ended up acquiring the company and we got a pretty good deal because they were without a bank and we had a bank. So we set out to kind of build out that infrastructure. But being that I had, experience on the acquiring side, I knew kind of like how the ISO models work and how the larger scale distribution of financial services in this context would work. So we set out to re-platform US Unlocked to be white labelable and web service enabled, what have you, and also built out a distribution framework to, essentially manage like the fee structure, manage an agent channel, and manage the distribution of those functions. And we built that out for a few years. And we're actually in the process of re-platforming, one more time to make all those services, available on demand. So, we're going to market in Q3 with a on-demand fintech platform. So anybody, essentially the first tranche will be any U.S. business can launch a fintech service. That will be, prepaid cards, bank accounts, remittance, crypto, what have you, all in an on-demand context. That's kind of like the direction that we're going.
Awesome. Both of you, and definitely Brian, you have had the full value chain exposure from acquiring to issuing and kind of settling or seeing the opportunity in infrastructure. Love to drill down more on that because we're seeing a lot of that. But Shamir, going back to you, I know you're doing infrastructure now, but kind of you have the Simple tag attached to you, and you talked about it in your opening remarks as well. So I want to talk about the challenger bank space. I mean, they're still active. I know Simple's kind of subsumed within BBVA, but there are others, the usual suspects, and also there are big tech players, big bank players, and big fintech players, if I can categorize them, kind of like the PayPals and Square. I mean, they have their own kind of flavors, if you will, and the crypto players. So how do you see the whole kind of challenger bank evolving? You have the unique vantage point, if I can say that you were the first challenger bank co-founder, so to speak. So your perspective is incredible.
Yeah, so challenger banking has basically grown up in the last decade, right? It's been almost exactly 10 years since Simple launched in July of 2012. And back then, the very idea that anybody in their right mind would bank with a fintech startup online or using a mobile app with no branches, no charter, all of these things. There was like what in today's world would be called a lot of FUD around it, right? Now it's not just that question doesn't even arise, right? Like if you tell somebody that you bank with, I don't know, a Varo or a Chime or a Current or one of 20 others, people will be like, oh, okay. But if you still look at it now, I think across all the neobanks, if you added up all the numbers of users and assume that they were all distinct, you got to believe there's some overlap at least. But even if you assume that they were distinct, you'd get to a number probably south of 20 million. Obviously, the big ones have a much, much larger chunk of it. And this is in the US, where there's 340 million people, over 250 million of whom are adults. So at best, challenger banks across the US are maybe at 10% market share. I don't think they're even that close. I think they're probably at like 5%, 5, 6, 7%, somewhere in that range is probably the right thing. So you're like, wait, after getting like massive amounts of like fundraising and hype and growth. Honestly, a lot of these companies now have millions of end users, and the whole industry is still just 5% of the market that they could go after. And the answer is yes. Most Americans still bank with Chase or BofA or Wells or Citi or the big traditional banks. So it's not day one for challenger banks anymore, but it might be like halfway through day two, right? It's still pretty early in the space. If you want to start a challenger bank today, that's still a case to be made that the market has not been won. I mean, heck, people start traditional banks now. So why not challenger banks, right? I do think, though, that what you're seeing more and more is it's kind of the universal model that kind of Simple went out with, which is we're going to bank everybody who's an adult, right? That can still work. I'm going to say it's a lot harder now because there's just a lot more competition in that space. What I see more and more is more focused challenger banks, whether they're serving Native Americans who have unique financial problems, whether they're serving Black or underprivileged communities, whether they're serving immigrants, whether they're serving different, specific communities. Sometimes those communities are not geographic, and they're not what you traditionally consider a community, right? Like African American. They might be a gaming community, and you're like, these are all the people who love playing particular game, World of Warcraft, whatever, right? This is a neobank focused at golfers, and it's like, really? Yeah, why not? There's traditionally a lot of people who love to play golf, and there's traditionally been like credit cards for golfers and all sorts of other financial services aimed at like golfers. Why not a neobank, right? So you see more differentiation and more like targeted focus, because it all comes back down to cost of customer acquisition and long-term value, right? Or lifetime value of the customer. So if there's definitely lifetime value. You can make you can make the model work, whether it's interchange funded or something else. There's a few different ways of doing it, but it can be done. But the cost of customer acquisition is not going down. And if you're going with a broad targeted strategy, then you're going to face roughly the same costs as everybody else. But maybe if you can like be more targeted and focus on a specific community or a specific strategy, that can, if you do it right, reduce your CAC and increase your LTV. And that's what I see happening more and more. I do suspect 10 years from now, when we look back on it, we'll be like, yes, the traditional banks are still there. They're not going to vanish in 10 years. Their market share will be much less, maybe south of 50% by then. And you're going to see a plethora. There's 4,000, 5,000 banks in the US and 6,000 credit unions, so 11,000 traditional FIs. I think there's space for at least a few hundred neobanks, challenger banks, but differentiated more and more.
Got it. Now that's great words of wisdom, Shamir. I think the last few minutes, the way you kind of built it up and going into the segment specific and the economic models like interchange or other, but kind of boils down to the customer acquisition or building that community, providing that lifestyle kind of value to the members or the customers. No, that's great. Brion, if you have thoughts on Challenger Bank, would love to hear, but I do want to talk to you. I know we talked kind of one-on-one about kind of your focus on inner city or helping inner city kids and kind of the whole kind of theme around inclusion and inclusive innovation, the Kilimanjaro initiative. So I want you to have some time to talk about that and your passion. I know you're very passionate about that.
Yeah, for sure. First, I would love to like kind of follow up on Shamir's comments about like neobanks. I agree. I think the opportunity is in like communities, right? A small, maybe like a Filipino community that has like specific drivers and they have specific brands. And they want specific discounts and specific merchants, right? They want specific services. Maybe, they're a community that like tends to like maybe have families loan money to each other. So pooling resources, pooling funds for inter-community lending, I think is really interesting niche. At Tern, we've actually found some very interesting opportunities in the remittance space, and having a banking as a service platform that can layer in remittance capabilities and moving money cross border can satisfy a lot of the value adds to a lot of these communities. We be them, overseas Filipino workers or Mexican migrant workers in the U.S. or offshore labor sources, technical resources. Call center resources, just moving money cross border, I think is really interesting opportunity for neobanks and to place themselves in the value chain there, and the provider can also make money on the FX spread and transactional revenue and incremental revenue in and above interchange. I think we all can come to a conclusion that interchange is going to continue to be beat up and depleted with regulation and what have you. I think there has to be other levers to drive these programs, and I think communities and again, I think remittance is interesting value add there. Thank you for bringing up Kilimanjaro initiative. Actually, I met 4 potential climbers yesterday in New York. So the Kilimanjaro initiative sponsors inner city youth leaders between 18 and 25, typically, on a trip to Africa, where we teach them leadership skills and training exercises and team building, and then they attempt to climb Kilimanjaro. It's a really unique opportunity to kind of springboard them into their new life and into a career. And I'm incredibly passionate about it. So thank you for plugging it.
Yeah, no, thanks for that. Where can they get more information if anyone wants to?
KIUSA.org.
Oh, awesome. Okay, that's good kind of level set foundation. I think a lot of people know you already, but that was a good round of introduction. It is mid-May 2022, so we can't have a lot of conversation without talking about the market sell-off and what's going on, especially tech and even fintech for that matter. So what do you think happens now? Meaning, are we at the bottom? I mean, it's hard to predict, obviously, markets, but maybe Brian, go to you first this time. What do you think happens here, and what sometimes in all these sell-offs and crisis lies opportunity? So talk a little bit about it.
Yeah, I honestly think that the market has kind of right-sized itself. I think that the market has been way overinflated. Some of these tech valuations, fintech valuations, have just been stupid, right? Trading on so many times ARR. It's just it's not feasible. It's not repeatable. And I think the public markets have demonstrated that by just these stocks getting crushed. Maybe they're a little bit undervalued now. I wouldn't say it's necessarily a good time to buy, but I think they will start creeping back up, especially if these companies can be capital efficient and maintain their installation base. So I think that has definitely trickled into the growth financing of the larger rounds of the B's and C's. I think a lot of that has come to a screeching halt because they're just not getting the valuations that they were 6 months ago. We are seeing early stage valuations similar to where they were before. But I think what I find incredibly interesting in the markets is that the crypto markets are basically in line with NASDAQ now, right? Whereas before, I think there would be a massive, sell-off of the stock markets, and crypto was not necessarily affected. But I think that there's so much institutional money in the crypto markets now that they kind of have to go hand in hand. So there's no longer this this or that. It's all this, right? So I think that's a really interesting change that's happened that we're all kind of realizing.
Yeah, interesting perspective. And just to note to our audience, it's not, we're kind of just chatting. This is not to be construed as financial advice. You should consult your own advisor.
You should definitely not listen to me for financial advice.
Because your context and your situation.
Or me for that matter.
But Shamir, I'd love to hear that non-financial advice or what you think is happening in the markets as well from your perspective.
Yeah, it feels to me sometimes we're doing an action replay of the 1920s, but we're doing it as a speed round. Right? We started off with a pandemic, then we started off with the pandemic, then we had a big financial boom, and then we had a big financial bust, and then we had war in Europe. This took like 20 years last time around. It's taken like 2.5 years this time around. And I'm just, so I do think there is some truth to that, in that one of the effects that seems to have happened with the pandemic is like, when you look at the boom that happened last year, and I tend to agree with Brion that like some of it was just like, felt like pure insanity in terms of valuations. Some in the public markets too. I mean, there was this whole meme stock phenomenon, which I just never understood. But then there was, even in the private markets, this late stage, you saw like valuations that were like kind of like historic all-time high multiples. And you're like, how is this company going to grow fast enough to justify that when they're already pretty big, right? It's not like tiny companies in some cases. So that it felt like there was a lot of good stuff happening last year coming out of the pandemic. And it just felt that the public markets, the boom got so far detached from the reality of the good news. And the upside of the cycle was almost like, hypercharged, right? Now I feel like we're seeing the reverse side of that, where we are seeing that there is some more bad news out there, right? Like there is like real inflation is a problem. The Fed is raising interest rates to combat that. We do have war in Europe, and there are supply chain problems left over from like the pandemic. I mean, and the pandemic isn't over, especially not if you're in China. So there are real elements of like bad news out there. And yet you look at it and you're like, inflation is high, but it's a lot of it is in stuff that we think is transient, like, food and energy prices. Unemployment on the flip side is at like all-time lows. The people still have a lot of spending power, and we are still just working our way out of the pandemic, right? And so I'm like, there's probably a little more bad news now than there was last year. But it's not like last year was like heaven on earth and this year is hell on earth, right? So it feels like just as the stock market got hypercharged on some good news, it now feels like it's hypercharged on the negative side on some bad news. And especially if you look at I was just looking like for, I think, public market cloud companies. Some of them are now trading at lower multiples than they did back in 2019, pre-pandemic, right? Oh. Now, I'm not saying the multiples of 2019 were right, but it's true that all of these companies are just like twice as big now than they were before. So I wouldn't. I'm not saying that the market's at the bottom or anywhere close to it, but it does feel like the optimism of 12 months ago was just way out of line with reality, and the pessimism right now is maybe also out of line with the reality of the economy. That doesn't mean that optimism from 12 months ago lasted much longer than I would have thought, and it got way crazier than I would have thought possible. Things can get way worse now before people get back to some semblance of like, the mean. Good news is I don't think it's going to hit the real economy nearly as much, because the real economy is the fundamentals there are not bad yet. So I don't think we are going into recession, like an actual recession. But I wouldn't be surprised if the markets go south further before they go north again.
We had a down quarter last quarter, right? So one more quarter and we're in a recession.
That's true. That is true. We were down on a negative, on a real basis, although not on a nominal basis.
Right.
Yeah. No. Hopefully that the R word, we don't like to hear that, but great historical perspective from both of you, and kind of the argument that things were a little bit in play. Obviously, there's a lot of printing or money supply, which
there too.
Yeah.
There was an unprecedented amount of money supply, and that's being pulled out of the markets, which is one of the big drivers underlying all of this. And interest rates are rising, but they're still we're at 1%. That's nothing compared to where we were 3 or 4 years ago. And if you look back over 30, 40 years, 1% would have been considered a low interest rate environment. So none of the absolutes of where we are actually bad. It's just the market's whipsawing.
Yeah. And Brian, you talked a little bit about crypto and NASDAQ, meaning crypto. I think your point was that it was kind of more, there was more money going to it, maybe for a variety of reasons. And now you're seeing some leveling. So talk a little bit about that.
Yeah, I mean, I just think that they're tied, whereas they have not been tied in the past, right? I think they operated kind of in a silo, early adopters of crypto, the holders, what have you, were kind of like driving those market conditions. And I think that there were, some early stage institutional people who actually could effectuate change in the crypto markets, like personally, right? China would, they would, I think it's commonly known that they would like change their laws around crypto, knowing that would affect the markets in a negative way or a positive way. And they would, essentially be able to hedge that and make money. I think that the gross crypto markets as a whole now are big enough that, individual institutional investors really aren't making a significant difference. But like as a whole, I think there's, I know people who are, in their 50s, 60s that are, they now have, a Coinbase account or whatever, and they're like watching the crypto markets, and it's much more, just topical in conversation amongst the cohorts that I don't think it was really attractive to before. I would also like add that, it's really unfortunate what's happened to like some of these, I thought would be like very interesting and potentially innovative stable coins, that are, just not doing what they should be doing and could, potentially come to like a crashing halt, especially those that aren't like actually backed with fiat. I think that's really like, a scary place. And, I just hope these don't turn into like a Ponzi scheme or what have you, $1 billion Ponzi scheme.
Right. Yeah. The algorithmic, stable coins and such. Yeah, I want to pivot to what you're building now. I mean, I think both of you are building in the fintech infrastructure space, and it's called different things, obviously platform, or BaaS, or banking as a service. So maybe Shamir, go to you first. Talk a little bit about what you're building in SilaMoney, and how do you fit in the ecosystem of fintech infrastructure?
Totally. So Sila is pretty much the only one that I know of, at least, which is a crypto native API platform for programming with money in the US. What that means is that our core product is a Restore HTTP API platform that does end user onboarding and identity verification. So KYC, KYB, digital wallets, virtual bank accounts, ACH payments, and wire payments, right? And we have we have the technology to support all of that. But we also work with a partner bank, Evolve Bank and Trust, and we integrate into their underlying accounts and payment systems through them. But we manage a lot of the compliance that is associated with getting somebody live as well. Obviously, we operate under Evolve, CIP, and policies and everything. But on a day-to-day basis, our customers interact with us. So they come to us, we handle their onboarding, reviewing their business plans and use cases, and everything that a bank would do, we do to onboard a new customer, but we just do it a lot more efficiently than banks have historically been able to do, right? So where it would take you, let's say probably 6, 12, maybe 18 months to get a new fintech or crypto startup off the ground in the US, working with most banks, we typically get customers live in 6, 8, 12 weeks, right? And that is it's a big change for folks, and it really allows them to focus their energy and their resources on the core problem, which is product market fit, rather than trying to figure out how to do things like reconcile a ledger with a bank account, or figure out how to process ACH payments, or deal with ACH returns. We've also gone very, very deep into the ACH space, and we recently launched a couple of products which I think really change the way people perceive and even use ACH, right? And if you guys know, ACH is one of the retail payment systems in the US. It's actually 10 times larger than cards in volume. So there's like 74 trillion a year of ACH volume compared to like 7-8 trillion of card volume. And it's the way that everybody's paycheck gets paid. It's how most bills get paid. It's how most of like B2B, government, all of that all mostly goes over ACH, right? It's a 50-year-old batch-based file system-based sort of payment system left over from the 70s. What we can do is for our customers, we can onboard their end users, verify their identity, link an external bank account, and with one API call, we can put the funds from that ACH available in a wallet or an account instantaneously, as opposed to the 2 to 3 day settlement period that typically happens. Now, in ACH, there's always the risk of a return. So the question is like, really, who's taking that risk? And we can manage that in a couple of different ways. Our customers can take the risk, and this is really useful in sort of B2B scenarios where folks are moving money, but it takes 3, 5, 7, 8 days sometimes to move money from one bank account to another. We can bring that down to like same day in many cases by making the funds available instantaneously. And if there isn't any real risk, then you don't have to worry about it, right? But there is a lot of B2C cases. There is a lot of risk. The internet fraud is a huge problem. And we will actually guarantee that fund and take on the risk ourselves. But when we do that, we deploy a huge bunch of technology, right? So we do device ID with biometrics. We look at account data. We look at KYC data. We have our own proprietary risk model to score the end user and the transaction. And if we approve it, we'll make the funds available and guarantee them. So that's kind of the set of capabilities we've built around that core ACH problem. But of course, there's a lot more than just that, virtual accounts and wire payments and all the things that our customers need to scale. Always building, always innovating. And it's really still, we're an early stage company, just raised a Series A last year.
No, fascinating. So from programmatic or making money programmable and targeting the pipes, right? ACH is one of the pipes you're targeting and kind of streamlining that, removing friction or making it quick. No, that's fascinating. And also solving not just the distribution, but the risk aspect, which is great. Hope we have some time to kind of get into the details. I want to get Brion into the conversation about what he's building. I know he's building something very similar, but kind of maybe in a little different aspect. So Brion, tell us about Tern.
Sure, thanks. So Tern is setting out to democratize fintech, right? So I've been in the industry for like 12 years now, and especially on the issuing side, it's like Shamir said, it takes a long time to like launch a card product or to launch any sort of fintech product. So we're setting out to bring that time down to hours, days to launch products. So in order to do that, we're doing it in almost like we're approaching the problem almost as a consumer problem. So how do people understand how kind of fintech works? So we feel there's this thesis that fintech should be for everyone. So in order to educate people, and these aren't like venture backed big fintech people. Yeah, we have a number of those in our portfolio, but we're really looking to add like traditional businesses who want to add fintech products to their existing customer base. So in order to get them accustomed to the utility of these instruments, we're actually launching a card product called Tern Cards in Q3. Tern Cards is almost like a Swiss Army knife of virtual or physical cards. You can limit the spend by merchant type, or to a specific merchant. You can automatically refill cards. The first tranche will be businesses in the US. So, a business can, KYC themselves onto the platform, link their bank account, verify their bank account, and start, issuing virtual and physical cards to, you could have a specific card for a specific vendor. You could give a $50 physical card to your office manager so he or she can only spend that on like a restaurants or what have you. So to help people understand like the utility of cards and how they could potentially be useful in their business. And Tern cards will be a free card product. So it's similar to like a Ramp or a Brex where you're controlling spend, but without having 15 features, we'll have like 5, but we're going to do them really, really well. And there will be 1% cash back on all Tern cards. So people will also understand that there's a monetary attachment to these transactions, to their spend. And once they're within the Tern cards app or the Tern cards web app, they'll see, some grayed out features there for payouts, for launch your own card product, launch a branded card product, do remittance, move to crypto. And those will be grayed out. And those features will only be available to Tern business users. So once you subscribe to be a Tern business user, those will be enabled. And those Tern business users we're going to, limit to the capacity that we as a company, like Shamir, we're an early stage company. We have a certain capacity to onboard these accounts. So we're probably going to limit it to probably 20 or so a month to start. And then we'll go from there. And the thesis is once we do this really well here, then we'll immediately do this in Europe and Asia and, go from there.
Yeah. Wow. I'd like to get that for my kids. It sounds pretty cool with the cashback and with the spend management control.
So after the corporate cards, we'll move to consumer cards. And those consumer cards will be, for allowances, similar to like a Greenlight. But again, Greenlight has like 15 features. We're going to have 5, but do them really well. But we're also going to, those cards will be able to like remit funds or, invest in crypto. If you want to use this as your actual card, you could like auto invest 2% in Bitcoin or whatever when you get paid.
No, would love to get a little bit more detail on it, Brian, but Shamir has to catch a flight and he's going to leave us. So we have some time to get a Brian. But let me get Shamir in real quick before he goes and catches his flight on some closing remarks. Shamir, where do you think fintech's going? Where do you think crypto is going? Obviously, we talked a little bit about the market. It's all kind of tied together, but your closing thoughts before we let you go.
Yeah, I think I agree with Brian that, crypto is now so big that it's not uncorrelated. It's gotten more correlated with the rest of the markets. And that's a normal journey. Any asset class, once it becomes big enough, it kind of becomes the market and everything gets correlated to it. So it's not surprising, I guess, that the correlations have increased. And there is a sell-off happening. I think actually public market fintechs have actually sold off more than crypto. That could change by the day or the hour now. Right, the selling has continued. So it can feel like the world is falling apart and everything is ending, and it's all going to hell in a handbasket. I think folks like Brian and myself have been around the block a little bit, know that it's never as bad in the downturn as it seems, and it's never really as good during the upside of the hype cycle as it may seem. It's the long-term secular trend for fintech and crypto is unchanged in my mind. Global financial services is a 17 trillion revenue industry, and all of fintech and crypto together maybe are coming up on like 2% market share. There's still a decade of growth left. And there will be, no matter how fast you grow, the market can always get ahead of you, and then it can get behind you. I think if you're a builder or an innovator, you should just stick to your knitting and keep building and shipping and changing the world and making it a better place.
Awesome. Great advice, great wisdom for somebody who's been around the block. Thank you, Shamir.
Thank you for having me, Paddy.
Okay.
Nice to meet you, Shamir.
Enjoy your flight. So Brian, sorry, the schedules kind of got a little bit overlapped there with his flight plan, which was late schedule, I think, or it was planned recently. But if I can kind of switch back and go back to your virtual card or prepaid card and the different features. So you're targeting corporate as well as maybe small business, and eventually plan to roll to consumers. And I think I thought teens would be a great kind of segment for some of that. And it's not limited to just purchases, right? And you talked about obviously spend management, some of the value added services, but also crypto. So talk a little bit about that, like how crypto fits into the card.
Yeah, crypto to us is really just like another onboarding and offboarding mechanism, right? So all of our cards can be loaded with crypto, and then all the cards and accounts can push money from the account or from the card into a crypto wallet, and there will be auto invest features. So if you're a contractor and you've got a contractor card, and every time you get your 1099 payment or what have you, if you wanted to automatically invest 5% of that into Ethereum, you could do that, stuff like that. So we're not holding the ledger, we're not holding the balance. It's really just like an on road or an off road through a gateway. But it's further demonstrating the kind of like the utility of a platform like this.
No, fascinating. Yeah. So you can have a single place where you can go to different places without actually maybe taking some of the risks and things like that. That's right. Awesome. I want to shift. I know we're talking infrastructure, and the term BaaS is used, and it has evolved over the years. And I've written over the years as well about
a while ago, right?
Yes, about open banking, and now it's called BaaS, and it was called open banking. So I think you have a thesis of how this is evolving, right? And BaaS as a utility, and also kind of a global BaaS. So talk a little bit about that.
Sure, thank you. So I think I think BaaS fills a need, right, in like getting programs to market faster. But from our perspective, it's only taking it so far, because you still need to build the app. You still need to have compliance. You still need to be SOC 2. You need PCI. You need to a lot of these BaaS providers still require additional third parties for KYC or onboarding or what have you, or your own Plaid account or whatever, right? Our thesis is like if you combine all these things, and of course we have an API, but to deploy these things in a low code or a no code framework that could be very easily like embedded or added to an existing application, you'll be able to spur innovation and really A/B test whether something is useful or not. We also want to make these services available to like incredibly early stage people, people that maybe they have a full-time job and they have this idea, or they have a community. Shamir had mentioned that a lot of these neobanks have like a specific demographics, right? And I think a lot of these interesting neobanks, some of the most interesting ones, have been born out of the needs of individuals who are just like frustrated with the existing banking infrastructure and not being able to get credit, or not being able to get a loan, or not being able to like get a card with a high enough balance or what have you. So we think that there's going to be almost like a grassroots kind of movement that people will be able to start to like launch their own like fintech products at an incredibly early stage, and they know their market, they know their community, and we want to empower them. And frankly, we want to democratize the process. If you want to launch a card product and you have 20 users, go ahead, and you want it to be branded, go ahead, use our co-branded card, we'll approve you, and you just launch your 20 cards, and you'll probably make some money off of it too. And if you want to like add features, then use whatever in our stack to do that. So it's really like targeting those early stage users with a technology stack that we currently have that can accommodate the hundreds of millions of dollars that we're moving every month, and the hundreds of thousands of cards that we've issued. We have the infrastructure to support like these big swaths of money movement and cards and fintech services, but we want to make those available to the really, really early stage, as well as like the mid stage. And I think honestly, like we have 2 unicorns in our portfolio. Like they're using our services. Like we call it fintech for everyone. That's the thesis.
Yeah, no, that's very powerful. So some of these early stage communities and folks that you're targeting or talking about, what do they need to know? How much kind of programming skills or other skills, or how simple is it?
So with our no code offering, they do not have to have any programming skills, right? They can go in, sign up, we'll KYB them, and we'll give them the tools to, KYC or KYB their customers, and, help them, put the systematically through the platform, launch their own card program that's fully branded for them, fully like a white labeled off the shelf, program that has, various features that they think will be attractive to their community. They'll be doing the marketing. They'll be doing, a lot of like the hands-on, tier one support because it's their customer. Right. But, every one of our programs comes, bundled with, an IVR system and customer support and all the things that they need, to actually operate the program. Whereas before you'd have to have probably 7 or 8 different contracts with a bunch of different vendors, probably $1 million in 12 months of a roadmap. We're trying to boil that down to hours.
Fascinating. And this, you're targeting multiple geographies and countries, or this is just US focused?
Yeah, great question. So for now, it's just US focused, and for now, it's US business focused. The next tranche will be US consumers. And then as a business, you could then launch a US consumer card as well, right? So every time we launch Tern cards for business, then Tern cards as a business user, as a business subscriber to our SaaS platform, then you can launch a business product as well. And then the next tranche will be consumers. And then, as a business, you can launch a consumer card on our platform as well. Obviously, like consumer cards, there's a lot more regulation. It's not a single source of funds. So, managing the funds flow in and out is something that we're incredibly proficient at. So, enabling people to do that through our platform is where we're going. And then after that, we still own this U.S. unlocked asset, which is a virtual card for non-U.S. citizens to buy U.S. goods. We're planning to convert all those card users over to be Tern cross-border card users. And that's about 250,000 people around the world. So all those people will be, global Tern cards users. And those cards will be limited to spend just at US e-commerce merchants, but that will, enable us to have a kind of a global foothold. And from there, we're planning to replicate exactly what we're doing in these other geos and get the appropriate licensing to launch these types of programs all around the world.
And do you see there's a lot of opportunity globally? I know there are some players that kind of play in that kind of global fintech or global BaaS market, but you see yourself going down that path in the next year or so?
Yeah, I mean, we're already there. We're already issuing cards all around the world through these various programs and platforms. But having local domiciles and local licensing in these different geos is the next phase. And yeah, there are a Rapid and Niem, and there's a handful of other, unicorn status companies that are doing this. But our feeling and being in the industry and kind of understanding where all these moving parts are, having a lot of that foundational platform rooted in a card product that is incredibly useful and has very clear financial tools and instruments and revenue share is where we're going with this. And I think Rapid and Niem and some of these others, they do have card products in various markets. I think they're probably starting to try to launch card products here in the US, and we're already kind of there.
Cool. Oh, very cool. Well, fintech infrastructure, obviously broad. Obviously, we talked a little bit about Challenger Bank earlier in the program, and crypto. What are some of the big things you are bullish about or are monitoring, Brion, outside of the stuff you are doing?
What are we bullish about? I think, again, the global context of money movement, it's still incredibly expensive and incredibly inefficient to send wires all around the world. And that's where, all of these banks and businesses, they're still, sending wires all over the place. It's having to like put a tracer on a wire to see where my $2 million went, I think is just asinine. Right. So I think layering in blockchain into that type of an infrastructure, it's already happening in some context. But I think in 10 years, it will be, it will be completely ubiquitous with cross-border money movement. And like the fact that, you eliminate the double spend problem, and you have, atomic transactions going everywhere, as opposed to like, where did my $2 million go? I mean, that's just ridiculous.
Yeah. Now, cross-border payments there are a lot of players, like you say, who are playing in blockchain, also some established incumbents that have kind of created their networks. I mean, it's one thing, the technology, and sometimes I feel it's also the network you build, right? How many banks, how many entities you bring into your network. But look forward to that. I mean, I know it is a area with a lot of friction. So, and blockchain and networks can solve some of that.
Totally. And like the whole like corresponding bank relationships, like it's so hard to be a corresponding bank with a US bank today outside of the US. That's from a regulatory standpoint, it's really been like ratcheted down. So there's only like a handful of like, legitimate, good, achievable, useful corresponding banks around the world, and they've got all the volume, and that, to me, that's it should be a wider swath, obviously within the regulatory framework, but it should be easier. You shouldn't have to go through all these corresponding banks to go bank to bank.
Yeah. In closing, I know we're coming to the top of the hour. What, like, you're looking at kind of more connections with corporates and small business, but overall, who are you trying to connect with for partnerships? Who would you like, and how can they reach out to you? In closing, what would your connections be there?
Yeah, I would, connect on LinkedIn. Our website is TernItup with an E, TERNITUP.com. We may be changing that domain at some point in the not so distant future. But we're bullish on enabling fintech for everyone. We feel like, empowering even like the individual user to take control of their spend and take control of their money, and educating people on how these financial systems work and what levers are being pulled, and democratizing access to those services is really what we're all about.
Awesome. Thank you, Brian, and thank you, Shamir, for sharing your views. We covered a lot of ground. Thank you for coming on the FinTech Talk Show.
Thank you so much, Patty. This was a lot of fun.